All right, back again for another deep dive. Today, we're wading into the U.S. economy, seeing what's happening with investments and how the post-election landscape looks. And of course, we'll be tapping into some wisdom from Howard Marks.
Sounds like a plan. We've got some really interesting data to unpack today.
Definitely. So to guide our deep dive, we've got two main sources,
Right, so we'll be looking at the November PMI report.
which gives us that real-time pulse on the economy, right?
Exactly. And we're going to dissect a recent interview with Howard Marks. Always thought-provoking. He tackles those big investment questions everyone's wondering about right now.
Absolutely. So let's jump right in with that PMI report, the big headline. Overall PMI is up, highest we've seen since April of 2022. So good news, right?
Well, at first glance, yeah, it seems promising. But there's a bit of a plot twist when you dig deeper.
A plot twist. Okay, I'm all ears.
Remember, the PMI combines data from both manufacturing and services.
Yeah.
And that's where the story gets interesting.
Okay, lay it on me.
Services are absolutely booming, strongest since March of 22.
Wow. So what's going on with manufacturing then?
That's the twist. It's actually still lagging behind, still stuck in that contraction zone. And get this, the gap between those two sectors, it's wider than it's ever been. Bigger than the pandemic, even.
So big gap, big implications. Break that down for me. Like, why should this gap matter to, say, someone listening who's not an economist?
Think of it like this. The PMI is really about future expectations. So services are riding high, lots of consumer demand propelling them forward. But manufacturers, not so much.
So what's holding them back?
It's a mix of things, potentially. Maybe some leftover supply chain headaches, or maybe businesses just aren't feeling too confident to invest right now.
Okay, so not all sunshine and rainbows, even with the PMI being up. Any bright spots for manufacturers, at least?
Well, one positive sign is new orders for manufactured goods. While they're still going down, the pace of that decline is slowing down.
So a possible turnaround.
Could be, maybe even by December.
Let's hope so. And what about that booming service sector? What's fueling that?
It's all about consumer demand. People are out there spending. New orders for services just hit a 19-month high.
Wow. That's got to be at least in part tied to that post-election confidence boost we've been seeing, right?
Could be. But we also have to remember that all that strong demand can feed into inflation, too.
Speaking of inflation, any relief in sight? That's on everyone's mind.
Well, both input and output price indices, they're both trending down.
Okay, that's got a good news there, S.
Definitely. And here's something interesting, especially for you as a consumer. Service sector inflation, it's at its lowest point since May 2020.
Wow, that's significant. So maybe a sign of things cooling down.
We'll have to wait and see, but it's definitely something to watch.
And how about the jobs picture? Anything standing out there?
Actually, yeah, there's an interesting flip-flop happening. Manufacturing actually added jobs this time around, while services saw some losses.
Really? That's the opposite of what we've been seeing lately. What's your take on that?
Yeah. Maybe a sign that businesses are starting to feel a bit more optimistic about future growth, especially in manufacturing.
You think so?
They could be getting ahead of the curve, hiring now, expecting demand to pick up. If that continues, we might be looking at a more stable job market in the coming months.
So some of that post-election optimism is actually translating into action.
Maybe so. Business confidence is definitely up, highest it's been since November 2022. And this is especially true for manufacturers.
Interesting. So what's behind that confidence boost?
I think it's a mix of things. Hope that inflation will ease up, anticipation of some business-friendly policies from the new administration, and some are even betting on new tariff protections.
Makes sense. And all this talk about navigating uncertainty, well, that brings us to Howard Marks. He's got some really timely advice for investors trying to make sense of all these mixed signals.
He does, and he jumps right into this big question everyone seems to be asking. Are U.S. stocks actually overvalued?
Yeah, it's the talk of the town, right?
Yeah, exactly. And Marks, he makes this really interesting distinction between stocks being, highly priced and severely overvalued.
Oh, that's an important nuance.
It is. He's saying U.S. stocks, yeah, they're expensive by historical standards, no doubt, but that doesn't automatically mean a crash is imminent.
Okay, so no need to panic sell everything just yet.
Exactly. He's advocating for a more, I guess you could say, defensive approach. Doesn't mean get out entirely, more like be strategic.
So what does that look like in practice?
Well, it could be a lot of things. Maybe you adjust how much risk you're comfortable with, diversify that portfolio a bit more, maybe make some moves to prepare for some bumps in the market.
Smart. But he's not saying to, abandon the market altogether.
Nope, not at all. And he has some strong opinions about market timing, too. Trying to predict those perfect entry and exit points, he thinks it's pretty much a fool's errand.
Yeah, good luck with that, right?
He says you're way more likely to miss out on gains when things rebound than you are to perfectly call a downturn.
It's so hard to time those things right.
It really is. And he brings up some pretty compelling examples. Like, think about the pandemic, all those geopolitical shakeups, or even those sudden inflation spikes we talked about. No one saw those coming in a way that let them, like, make a perfect market play.
Makes you think twice about trying to be too clever.
Right, right. And speaking of investing legends, we talked about Warren Buffett earlier. Mark's also had some thoughts on why Buffett's sitting on so much cash right now.
Yeah, like almost 30% of Berkshire Hathaway's portfolio is just cash. Some people are saying that's a sign he's bearish on the market.
Marx doesn't see it that way. He thinks it's more about caution than pessimism.
So not bearish, just being prepared.
Exactly. Don't forget, Buffett is the king of long-term investing. Patience is his superpower.
That makes sense. So he's basically just waiting for the right opportunity, and having all that cash gives him the flexibility to jump on it.
Precisely. He can make a move when everyone else is panicking. No, Marx also talked about China, a market that's, well, kind of a mixed bag right now.
Risks and opportunities, right?
For sure. Marx acknowledges the economic challenges, no sugarcoating there, but he also sees potential in those assets that have been kind of beaten down, you know?
So China, not a place to write off entirely.
He reminds us that some of the best opportunities pop up when everyone else is running for the hills, when a market seems uninvestable to most.
It's like that contrarian thinking, right? Going against the herd.
Exactly.
Yeah.
It's about spotting those diamonds in the rough that everyone else is overlooking.
I like it. Any other words of wisdom from Marx that we should keep in mind?
He really emphasizes this timeless principle.
Yeah.
Buy quality assets, make sure you're getting them at a reasonable price, and then just hold on to them.
Simple, right? But probably harder to do than to say.
You got it. Sticking to that plan when the market's going haywire, it takes a lot of discipline. You need that long-term vision and a really good understanding of what your goals are and how much risk you can actually stomach.
It's all about keeping a cool head when everyone else is freaking out. So, before we get back to Marx, let's take a quick look at what actually happened in the markets this past week.
Sounds good. So overall, pretty positive week for stocks. The Dow Jones climbed almost 2%. The S&P 500 gained 1.68%, and the Nasdaq up 1.7%.
Not bad at all. Anything else standing out?
The Russell 2000 actually had a really strong showing.
The Russell. Remind me what that one tracks again.
That's the one that focuses on small cap stocks, and it surged over 4%.
Wow. So small caps were the big winners this week. Why do you think that is?
Well, remember how we talked about that optimism around the U.S. economy? Small caps tend to be more domestically focused, so they could be getting a lift from that positive sentiment.
Yeah. They're often seen as having more growth potential, right?
Yeah, but also more risk. So when investors are feeling bullish, they tend to gravitate towards those smaller companies, hoping for those bigger returns.
Makes sense. Now, were there any specific sectors that did particularly well?
Consumer staples and industrials were definitely leading the pack. Both posted really solid gains.
Interesting. Anyone lagging behind?
Communication services actually underperformed a bit this week. Part of that's probably due to that dip Google stock took recently.
That'll do it.
Yeah.
Now, switching gears a bit, how did things look for assets outside of stocks? What happened with oil, gold, Bitcoin, and bonds?
Okay, so oil prices jumped up. We're talking over 6% for the week. Gold had a good run too, climbed almost 6%.
And Bitcoin, did it do its usual Bitcoin thing?
It did. Surged over 10%, almost hit that $100,000 mark. Always keeps us on our toes.
For sure. And bonds.
Yeah.
Were they joining in on the fun?
Not really, no. Actually, the 10-year Treasury yield went down a little.
Oh, so maybe some investors are getting a little cautious, seeking safety in bonds, even with all the market optimism.
Could be. It's like they're hedging their bets a little. Yeah, maybe they're not quite ready to go all in on the rally just yet.
Smart move.
Yeah.
Well, let's take a peek at what's coming up next week. What's on the economic calendar?
Oh, get ready for a busy week. Lots of data coming out. We've got the S&P Case-Shiller Home Price Index coming out, so that'll give us an update on the housing market.
Right. Always good to keep an eye on that.
And then we've got the Consumer Confidence Index. That's always a big one, right? Gives us a sense of how people are feeling about the economy, how willing they are to spend.
Definitely. Any other housing-related data coming out?
Yep. We'll also get numbers on new home sales.
So a pretty good picture of what's happening in the housing market next week. Anything else we should be watching for?
On Wednesday, we've got durable goods orders. That'll give us some insight into how much businesses are investing.
Like
We
that.
get those all-important Q3 GDP revisions.
So we'll see if the economy actually grew as much as we initially thought.
Exactly. And then to round out the week, we get the PCE inflation data.
Right. That's the Fed's favorite inflation gauge, isn't it?
It is. So everyone will be watching that one closely, looking for signs that inflation is really cooling down.
Lots to digest next week. Now, switching gears to earnings season, are there any big companies reporting that we should be paying attention to?
Oh, yeah, tons. Monday, after the bell, we'll hear from Zoom.
Well, that's interesting. They've been facing some challenges lately, right, with the whole return to office trend.
Yeah, so it'll be fascinating to hear how they're adapting to this, evolving landscape of remote work.
For sure. Anyone else joining Zoom in the earnings spotlight?
Tuesday is a big day for retail. We've got Abercrombie and Fitch, Best Buy, and Macy's all reporting.
Wow, big names in retail. So their results should give us a pretty good idea of how healthy the consumer is, right?
Absolutely. And we'll get a sense of how holiday shopping is shaping up.
Key insights for investors there. Any other companies reporting later in the week?
On Tuesday, we'll also hear from Dell. That should give us some color on what's happening in the enterprise tech sector. And then on Wednesday, we get earnings from CrowdStrike.
CrowdStrike, that's cybersecurity, right?
Yep. And they've been doing really well lately, so their report will definitely be one to watch.
So a pretty interesting week for earnings. Tech, retail, cybersecurity, something for everyone.
Definitely keeping us busy.
Well, we've covered a lot of ground today. We saw some economic optimism in that PMI report, gleaned some valuable insights from Howard Marks, and even got a quick update on what the markets did this past week.
A lot to think about.
And as always, it's so interesting to see how all these different pieces of the economic puzzle fit together. Now, before we go, I want to leave you with a question to ponder. We talked a lot about valuations today and the importance of buying assets at reasonable prices. But in this market, how do you actually figure out what a reasonable price is?
That is the million-dollar question. And unfortunately, there's no easy answer.
No magic formula.
Nope. It depends on your goals, your risk tolerance, the specific asset you're looking at, and of course, the overall market environment.
So it's more art than science.
To some extent, yes. It requires research, understanding the fundamentals, and figuring out how an asset fits into your overall strategy. It's a process, not a quick decision.
Well said. Always learning, always evaluating, always asking those tough questions. Thanks for joining us for another deep dive. It's been great having you with us.
Always a pleasure. Until next time.